Hello and welcome to today's episode of Somo's Boost Biz e-learning course. My name is Caroline and I'm going to take you through the difference between personal finance and business finance. I'm going to explain to you what the difference is, how you can isolate these two different cash flows in your own business, and why it matters for you as entrepreneurs so that when your businesses are up in scale and running, this does not become a source of conflict going forward. So your first question might be, what is business finance and what is personal finance? The difference is when you look at a business, especially if you run the business, you're more likely to take what you would use for your own personal use as a business expense. It might be unconsciously or consciously, but as entrepreneurs who are building a business, it is very important from the start to isolate, okay, I bought these, for example, these tables for work, and I bought these set of stationery for work, but then I bought these clothes for myself. This matters because when your business is growing at the rate that we at Somo hope it does, this can become a source of conflict, and we would not want to see our entrepreneurs struggling with, oh, I don't understand why my cash flow is going this way or the other way because of a simple distinction of when I went shopping and I bought clothes or I bought furniture or I bought an asset, you are not consciously aware why I am doing this. So some examples of personal finance are the ones you can see on the screen, but I would also add stuff like, for example, lighting is one example. So lighting for your house and that for your workshop. Even if your workshop might be in your house, you really have to be aware that I spent X amount for using the equipment in my house. So that's your electricity bill. And your rent. If, for example, your workshop is not in your house, the rent you pay for your home and that for your workshop or your office or your studio are very different. And it's very important to separate those two. Okay. Now that we've gone through the difference between personal and business finance and we've had some examples, let me explain to you why it is important and the benefits of separating these two different cash flows. The first and most important thing is it will avoid you getting into debt. It is very easy for you to take some cash from one account into the other to supplement. For example, if your business is struggling a little bit, and that's perfectly okay, that is part of entrepreneurship, you might be tempted to use your cash flow from your personal account to supplement or to pay bills in your business account. Although that might steady your business account at that moment in time in the short term, in the long run, that might become a habit. So you'll find that your business is doing so well, personal finances are weak, and that's not fair to yourself or to your business. One way you can avoid this going into debt is when you go out to purchase an item, let's say a cooking stove if you work in catering or hospitality, is to ask yourself, for example, if it was me, I'd go to the shop like, if I purchase this oven, will that affect my business indirectly? Meaning that when I purchase this oven, then I set it up, I will be able to make products in it and sell? Or will it affect my business indirectly? Meaning that, yes, I'll have this beautiful new oven, but I can't see a straight line between purchasing this asset and me and my business making money from it. If my answer is yes, it'll affect my business directly, meaning that I can see how having this new oven will turn my business over or will increase my revenue, then that is a straight business expense. If the answer is, I'm not too sure if this oven will affect my business, it's not a straight line, really take time and reflect and see, will this add revenue to my business or is this a want I'm satisfying via the business? The third reason why it's important is because it's very easy to spend your revenue from business on yourself and vice versa. I am guilty of that in my own business and I can confirm it is not a good idea. So a good way to avoid this happening is to have two different accounts if that's possible for you. And you have one account and you say any transaction for my personal use goes to this account. And another account and you say any transaction for my business goes to this account. That way you can separate the cash flows, the revenue, the expenses, and you can track your business growth so much easier if it is not interrelated, mixing up with your personal use. If that's not possible for you, that's totally fine. Whatever bank account that you have, you can go to your bank manager and ask them to open another account for you. So if, for example, you use Cooperative Bank, you can have two different accounts. So it's one bank with two different accounts. Another reason why it's important to have your business and personal accounts separately is if, for example, your business is new or it's an existing business and you have a new product you want to bring to the market, the easiest way to get new customers is to have incentives like, offers, cheaper prices, or give out samples. Now, it is great to give out samples and do all of these things, but at the end of the day, it costs your business. So you really have to account. For example, if I work in sanitation and then I have small sanitizers or masks and I give them out to people as samples for free, that's great because, it gets your business out into the public and people can relate. Hey, Caroline has good sanitizer, which is good, and they'll come buy from you eventually. But at that moment in time, you have to be like, okay, the business gave away a sample of sanitizer for maybe 15 shillings. You have to note that as an expense because it costs you time, resources, effort to create that product, and you need to account for it at all times. Ultimately, the most important reason why we separate our business from our personal expense is because to get a clear picture of the financial health of your business, you need to know your source of revenue, your cash flow, and your income statement for your business. I totally understand that you are emotionally invested in your business, and it is hard, at the start to be like, hey, this month it didn't go very well. But that's okay. That's entrepreneurship at the beginning. That's where you get the courage and the strength to continue. Because first of all, it'll make you understand where your business is at, and it'll give you encouragement to know that this month my expenses went A, B, C, D. Next month I will adjust myself and my expenses so that I make a profit, or at least I do better. And going forward, that becomes your train of thought, that becomes your habit, and then your business grows healthily and is able to sustain itself. This is the end of the lesson. Thank you so much for listening to me go through a difference of personal and business finance. I hope you learned something. I'm very passionate about this topic. If you have any questions or comments, or you need some clarification, do leave them in the comment box below. Be sure to share this video, like, comment, and subscribe. Thank you so much.